This is a video about a really unique trading indicator known as volume profile plus pivot levels by ChartPrime. Now, this is a tool that you can use to combine the power of volume analysis with key price action turning points, all while keeping your charts incredibly clean. We're going to go over what this indicator is and how you can use it in your trading. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the platform I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load whatever time frame and market you like and click on Indicators, then type in Volume Profile plus Pivot Levels. It's going to be the one by ChartPrime. Add it to your chart and you're good to go. Ladies and gentlemen, this is the all-powerful Volume Profile plus Pivot Levels by ChartPrime. In short, it builds a rolling volume profile over your look-back window, marks the point of control, and then filters raw pivots so only the ones backed by real participation become levels that extend forward and self-retire after first touch. It's structure plus liquidity fused into a simple map you can actually use. Now let's look at what's actually on the chart, because every visual here is doing real work. On the left, you've got a rolling volume profile built over the last period bars. Default is 200, and it's carved into volume profile resolution bins. Default is 50. Spanning the highest high to the lowest low in that window. Instead of stacking a bunch of bulking boxes, the script renders the entire distribution as a smooth left side polyline, which keeps the chart lightweight and responsive even when you crank the resolution. Each bin is literally accumulating traded volume, so that contour is a clean picture of where business was done, not just where price passed through. Sitting inside that profile is the point of control, the highest volume bin in the current window. The script marks it automatically with a horizontal line that extends right up to the latest bar, and it tags it with the label that shows the absolute volume at that price. If you don't want it, you can toggle POC visibility in the inputs. You'll also notice the color tone shifting between a teal vibe and a maroon vibe. That's the delta-aware coloring. The script tracks up minus down volume across the entire period to compute a net delta. When that flow is positive, the profile, POC line, and POC label adopt the teal tone to signal buyer dominance inside the window, and when it flips negative, they switch to maroon for seller dominance. Across the candles, those horizontal lines you're seeing are not every little swing. They're promoted pivots that had to pass a volume test. Under the hood, raw pivots are detected first using length, default 10 on both sides, to find swing highs and lows. Then each candidate pivot is validated against the profile. It has to land within its bin and meet or exceed the filter percent threshold, measured as a percentage of the POC volume. Only the pivots with enough participation get promoted to chart levels, which removes weak, low participation swings. When a pivot does make the cut, it prints as a dotted ray that extends forward. The moment price intersects that level, basically the high or low straddles it, the ray stops extending automatically. That self-stopping behavior keeps your chart from cluttering with stale lines and makes fresh structure obvious as it forms. Each promoted level carries a compact label right at the pivot bar that packs two numbers you actually need, the bin's absolute volume and the percentage of POC volume for context, and the ordering clips smartly for highs versus lows so you can read it fast. Put together, the profile shape, the delta-aware coloring, the POC anchor, and those volume-validated forward-extending and self-stopping pivot levels give you a complete high-signal map of where the market is most likely to respond without the usual noise. Now jump into the settings, because this is where you make it yours. Under Volume Profile, period is how far back the profile looks. Higher makes the read smoother with a steadier POC and tone. Lower makes it more reactive but noisier. Volume Profile Resolution controls how many bins sit between the window's high and low. Higher gives finer detail and a more precise POC. Lower gives a chunkier, smoother contour. POC simply toggles visibility of the point of control line and label. It doesn't change any calculations. Display turns the promoted pivot levels on or off so you can run the profile alone if needed. Length is the pivot detector's sensitivity. The bars on each side required to recognize a swing. Higher is stricter with fewer swings, lower is more loose but with more swings. Filter percent is the volume gate for promoting a pivot. The pivot's bin volume must be at least this percentage of POC volume, for example 20, means greater than or equal to 20% of POC volume to print as a level. Raise it to cut noise and keep high participation levels, lower it to surface more levels on lower time frames. After that, click OK. All right, back to how to use it. I like to start with directional bias by reading the profile tone and the POC. When the delta-aware theme is teal and the profile is building higher near the POC, I lean bullish. When it's maroon and building lower, I lean bearish. From there, I focus on the first retest of a freshly promoted level, because the moment price touches it, the level stops extending, and that first interaction is where you often see the cleanest response. Now, for a bullish setup, these are the conditions. Condition number 1, we want to confirm a bullish bias. And to do that, we're going to need the volume profile to be green as well as the POC line. As you can see here, this is the POC line and it's green, basically indicating that in this current window, there are more buyers in the market than sellers. Condition number 2, we need to have a pivot low printed, and for the price to come and retest that pivot low with a wick and then show signs of bullish continuation. Right here, we have a pivot low, and you can see it has a 61% volume relative to the POC. What that basically means is the POC had a volume of 58,000, and 61% of that, which is 35,000, was during the establishment of this pivot low, which makes it an area of high interest. Now, we're going to track this pivot low so that we can monitor to see if the price does a retest. The way I'm going to do that is I'm going to take the rectangle tool and draw it from the closing point of this bearish candle all the way to the lowest part of the wick of this bullish candle, the candle that did establish the pivot low. Then I'm going to extend this rectangle forward so we can monitor it, and the basic idea is to wait for the price to touch this level, either with a wick, or it can even close inside of it and then outside of it, provided it doesn't close below it. If it closes below it, the entry becomes invalid. We let the market play out, and right here you can see this is a wick that touched our level. Now, we need to wait for signs of bullish continuation, so something like an engulfing candle or a big bullish candle before we take the trade. Right here, we can see we have a huge bullish candle, which indicates that the price is most likely going to continue going up. We take a long position here, put the stop loss just under this huge wick. For the take profit, we're going to set it at 1.5 times the risk. Letting the trade run. And as you can see, ladies and gentlemen, the trade was profitable. Now, for a short position, the first condition is to confirm a bearish market bias using the volume profile. If the profile is red, you're okay to be looking for short positions. The second condition is to identify the most recent pivot high and wait for price to retest that pivot high. Here, we have the pivot high. You want to use your rectangle tool to track it to the right. The way you do that is you want to cover most of these wicks you see here, drawing roughly from this bullish candle all the way to the top of this wick, then pulling that to the right. Then you let the market play out. As you can see, we have this candle that touched our level with a wick. Next, you wait for signs of bearish continuation, maybe several candles increasing in size. Right here, you can see we had 3 back-to-back candles that were increasing in size, which means the price is most likely going to go down. You take a short position here and put the stop loss right above this level. For the take profit, you're going to set it at 1.5 times the risk. Letting the trade run. And as you can see, the trade was profitable. In summary, volume profile plus pivot levels fuses liquidity and structure into a self-maintaining level map, a rolling profile with a clear POC, delta-aware coloring for fast bias, a volume gate that promotes only the swings that matter, and forward-projected levels that retire themselves after first contact. It's a straightforward way to keep the most important zones front and center as the market evolves. This is not financial advice. Everything here is educational and built entirely on indicators, and you should always layer in your own price action or fundamental analysis before risking real money. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.